Welcome back, real estate friends. Thank you so much for joining me on this amazing adventure to understanding multifamily real estate investments. This is such an amazing time in the market right now. And what we're going to cover today is so important because market cycles determine how profitable and how well you do at your real estate investments. Understanding what phase of the cycle you're in is crucial to determining what you should do with real estate and how you can expect it to perform. So we're going to understand market cycles today. And if you love this content, which I sure as hope you will, and I'm sure you will, is that you should like, comment, and subscribe. Please like, comment, and subscribe on this channel. Share it with your friends, anyone else who's interested in real estate investments, because we have this great opportunity in months ahead of us, and you'll understand that when we get into this content right now. So what's important about market cycles, as you can see on the screen, is we have a sine wave here, and this shows the market cycles. We have a buyer's market one, which is near the top of the peak, heading down to a trough, which is a buyer's market two. As we continue up in the slope on the top side there, as we continue to expand, is a seller's market one, and the top near the top of the peak is a seller's market two. We're going to discuss each one of these phases in depth and what you can do to benefit the most out of these phases. It's so important to understand that each phase lasts about 3 to 5 years, with the whole market cycle happening about 8 to 12 years. So it gives you kind of a general gauge of what happens there. Okay, peak signal a slowdown as demand stabilizes and supply catches up. That's what we start off with. Just after a peak, we call it a buyer's market one. The key indicator of a buyer's market one is demand has fallen to its lowest point. During this phase, you want to buy and hold because there is no or limited cash flow potential. Contraction follows, characterized by reduced demand, price corrections, and a decline in construction. As demand continues to follow, we head into a next phase of the cycle, which is a trough. Troughs mark the bottom, setting the stage for a new cycle. We call this phase a buyer's market two. The key indicator of a buyer's market two is rents have risen for the first time in a long time, which signals an emerging market and expansion begins. You want to buy and hold during this phase because there is a huge potential for appreciation as expansion happens. During expansion, demand surges, prices rise, and new developments flourish. In the middle of this expansion, we call it a seller's market one. The key indicator for this phase is demand is at its highest point, and rents have risen to the point when new construction begins again. During this phase, you can buy, sell, or flip because demand is so high. As expansion starts to taper off, we start to approach another peak and enter what we call a seller's market two. The key indicator of a seller's market two is job growth slows down. The only thing you want to do during this phase is flip, because you don't want to be holding the bag when it turns down. You should always be looking to sell out of a market at a seller's market two. Sell marginal properties and keep legacy properties. The cycle then repeats, heading back into a buyer's market one following the peak. As you can see, keeping an eye on the key indicators is crucial because it helps you identify what cycle a market is in. Emerging markets, or a buyer's market two, is one of the best phases because of how much wealth can be generated during this phase. It notoriously creates bad investors because demand is so high that even the most novice investors can make a killing. Furthermore, external factors like interest rates, employment, and economic health play pivotal roles in creating the phases of a market cycle. Understanding these cycles is crucial for investors, guiding strategic decisions to ride the waves of opportunity within the dynamic real estate landscape. I hope you find this information as valuable as I did when I first learned it. This information alone can make you wealthy. We currently are in a buyer's market one, heading to a buyer's market two, which is the best time to get involved in multifamily investing. Once the trough is reached, we will start seeing tremendous opportunities due to how much demand the market starts to see. So if you have been on the fence about investing in real estate up until this point, now is the time to get involved. Let me handle all of the nitty-gritty details around finding properties, selecting management companies, and distributing cash flow. You sit back and watch as you generate passive income that can take care of your family for generations to come. Happy apartment hunting. Your fellow multifamily real estate investment expert, Connor Scott McCarl, out.